this particular asset. So if we just drop to H4, if we're pushing up, we'll be looking for demand zones. If we're pushing down, we'll be looking for supply zones. So that the terms don't confuse you, we're just looking for order blocks. That's what that means. We're looking for order blocks. So if you are pushing up, let's say price is going up, we're looking for them to leave an order block for us to use somewhere in here so that they can retrace into and we can buy. So at this point, these buys are not yet solid until we break most probably this order block at the top here, you see. So price could be respecting this, wanting to come back down. That's also possible. So based on the daily, there's no bias. When we come to H4 as well, there is no clean bias there. When we jump to H1 now, we have a little something to work with. You notice we've got this was yesterday's low. They did not retest this order block. You can see I had marked it, waiting for a setup there. The next order block in play is this one, right? So either they will respect this area, but at the same time, I want to see like a week we spike down to induce maybe sellers before we see price coming back up to this level here. So I'll be happy if I can see a stop hunt low, a stop hunt to the downside before we can actually push up. That's the pattern I'm actually looking for here. In terms of higher time frame bias, I do not see any. We also notice that price is trading above yesterday's high right here. You can see that's the area where we are. So for me to actually buy this, I would love to see price push up, maybe break this order block here, then come back to retest. Then I can look for buys. I can confidently look for buys. Yesterday, let me touch on yesterday also. Where could you have bought yesterday if you were trading? Because if you notice this leg here, there was no pullback at all, nothing at all. So I'm just going to give you hints which you can try to use when the market is accelerating, of which we won't know as well until the market does what it does. So whatever you do, first, what I need to say is you need to use proper risk. If your risk is okay, then you can use any strategy to actually attack the market. So initially, I was actually stalking. I noticed when I came to the charts, price was honestly here. This is when I came to the charts. Initially, when I came, they were here. I remember, okay, I checked them, they were here. I marked this order block and I thought they were going to come back. The next time I came to the charts, they were here, right? So from here now, I started to think, how best can I jump into this trade with the least amount of risk? So the only thing I had to work with here was this level, which was the previous day's low, right? If you see here, price came and stopped. Then the next candle was bullish. Just based on this price action, I was like, you know what? Let me just take one position. My risk is minimized to just below the previous day's low because I cannot put my stop loss here since that was where the last level was. So I decided to put my stop loss here, execute one, and they pushed. And I think I exited this trade here because I still felt like they were still bearish. So it was only wise for me to actually take my TP right here. So looking at it today, this again could work as a flip zone. We also have the 50 EMA here. But for me to be confident with the buys, two things have to happen. They either have to push up, then retrace so that I can buy that retracement, or they need to push down, do a stop and maybe come and tap on the 800 EMA. Then from here, we're going to have a new order block. So if they do come down, let's say they come down here, we'll have a new order block here or here. So we're going to wait for price to break that order block. Then we are going to take a buy. So those are my two views on B1000 for now. So I'll just leave this chart on M15 so that I can pay attention to price. I'll also mark this price line here. It's on 14,710. Once we break 14,710, I'll be actively stalking to get a buy. So 14,710, that's my point of interest. Then if we do come down, I'm looking at the 800 EMA. Or let me just check if M30 has got like an order block or something we can use. Okay, the ones I see are a bit low, but the thing is, with synthetics, price can still come into this OB here. They can still get into this OB here. But again, if you zoom in, you see M30 price looks like they're failing to break below the 200 EMA. You can see these rejections here, they're still closing above the 200 EMA, closing above the 200 EMA. So let's just stoke this and see if we can get up here so that we can buy, or see if they want to still do one more run to the downside before we get the buy. For now, I'll say those are my two views. So I'm going to leave this on M15 and we'll keep stoking there. That's B1000. Okay, so let me just monitor. Let's check C1, C1, C1. C1 yesterday I did not execute, but if anybody was stoking, I'm sure you caught a sell because price simply continued pushing up, right? All this while we're bullish, 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 bullish. We slowed down here, but there was no pattern at all. We came back, slowed, we came up, slowed down here. There was no pattern. We slowed down here. There was no pattern. At this point, this is where I stopped stoking it. I was like, it's now late into the day. There's no way I'm going to take trades because, again, remember, there's that swap time in the evening. So I did not take trades, but I then checked it before I slept and I realized that these guys came and tapped into the 200 EMA. Then they broke and closed below this order block. Right here, that's where you're supposed to be interested in this trade. So just to mark this order block right there. And remember, you're only entering after H1 is closed. So H1 closed just below this red line. Let's go to M15. Let's see how we could have attacked it. So on M15, you can see it's clean. That's a break and a retest. Remember, H1 closed below this red line. So H1 closed somewhere here. So you could have waited. You could have entered one position here because sometimes price will just drop. In this example, price then retraced and bounced off that broken order block on H1 again. Actually came back again for a third time, respecting this area here, and we dropped. So in terms of TP, you would have just put your TP here, which was actually the previous day's, I think, low. Let's see. Yes, it was this day's low. So you could have used that area there as a take profit. So that was yesterday's setup. So looking at it today, what do we have? Jump down to the daily. Daily, this price action is not bearish, as you can see. This is not a bearish price action in my view. Yes, we are below the 13 EMA, but I feel like price looks like they want to push back up into the 13 EMA. That means I'm only paying attention to yesterday's high. Yesterday's high is only going to be visible clearly on M15, which is there at the top there. What would make me sell this before they get there? Maybe if price breaks this level here. If we break 53.90, then I'll look for sales. Once we break 53.90, I'll look for sales. But right now, my point of interest is yesterday's high, right here at the top. So if price can get there and maybe show me a pattern, take out some liquidity or something, I might consider taking a short-term sell as well. Because remember, the past few days, we haven't really had moves. Price is sort of going sideways. We are like within a range. That's why I'm saying I'm only interested in yesterday's highs because it looks like we are in an almost range there. So the high probability setup will most likely happen around this area, right at the top there. But if we don't get there and we decide to drop from current market price, then I'm looking for sales below 53.90. Then if something else shows, then I'll let you know. But if you also notice below 53.90, price will be below the 13 EMA as well, and most likely below the 50. So that will show a possible push to the downside can actually happen as long as we come back below the zone. At the same time, maybe you might want to put a trend line there on these lows here. So in terms of TP, you already know the target. We're actually targeting the trend line because right here we also have a zone. So this will be the target. But if we do break, then we might get a continuation. But let's see what happens around this area here. So C1000, I'm going to leave it on H1 and I'll just be checking it throughout the day to see if we can get something solid. C5, we were waiting for it at the top here. They did not come back. So this is another variation whereby price accelerates and refuses to come back. What happened here is they broke this level here. They started retesting it. So if we had noticed this like 4 hours earlier, maybe we could have taken it somewhere here, even one position. But I think we've missed the trade. And price looks like it's already on the target which we had, which is 22.45 area. So can we trade this today? I do not think so. Yes, we might. But if you notice now, we've moved so much aggressively away from the EMA. At some point, price is either to go sideways or it has to retrace. So remember, we're aiming for this level here, the red line. We got there. Then I also mentioned we might get to this liquidity here. That's where we actually are. We haven't actually broken it, but we are very close. So price might just tap liquidity and retrace, or they can actually retrace all the way still back up here. So I'm not really interested in trading C3 today. I'll check it maybe tomorrow. Then C5 looks like these guys have to pay us. We've been stalking. I remember yesterday we shared a late night signal. You can see this is the setup I had right here from yesterday. This is H1. I think we entered here. This was our pattern here. Price had bounced off a certain area here, again here, and we had one runner at the break of this level here. Let me jump to M15 so that it's clear. All right, on C5, you can open one position. A current market price, please open one position there. We still want to catch this move because I feel like at some point these guys are just going to accelerate price to the downside. So if we can have one position at current market price, that will be perfect on C5. So let's now jump into it. So from yesterday, I'll explain yesterday's setup. This was my charts marked exactly like this. I might have added something like a trend line maybe after. Price failed to come below that trend line. So we were in sales right here at the close of this candle. This was my first order block. So I sold here and I wanted to sell again here at the break of this order block. But if you were following price, you would have noticed that they failed to break here. Our stop loss was above the last high. So price came, took us out. And yes, they respected this zone again, which was this order block, which was also on the previous day's high. So for a scalp sell, it might have worked to catch a sell here, maybe catch a few pips. But again, price failed to break an order block. So in an uptrend, if price is going the other way, you will see it failing to break order blocks. They will be failing to break order blocks. Those order blocks will actually be working as bullish order blocks. So price will be coming and tapping and pushing up, creating another one, tapping and pushing up. We only sell if we get a broken order block like this. So they completed the day being bullish like that. Then today, I actually came earlier and I had marked this because I was checking it on my phone. I had marked this. So right now, as you can see, we've got an M pattern, and this is the last visible order block we have. Let me actually use this. Okay, this is the last order block we have, right? So two things can happen here. Price can just drop, maybe retrace at some point, but I'm sure they'll be aiming for this liquidity here from earlier in the day, right? This is the first target. The second target is yesterday's lows right here, of which soon as we break this red line, which you see here, I feel like we'll actually melt. we'll actually get some very good sells. So for now, I would say first scenario, like I said, price might just drop, maybe retrace a bit, bounce off something and continue down. Or they can retrace into this broken order block here. For now, that's my view. If they come back above, it's either they'll be coming back for equal highs to give another drop here, or they'll actually be continuing being bullish. So for now, this is my view based on M15H1. So let me just check the daily, see if we can confirm something. The daily, again, is the time frame which is not really giving me something which is too solid. Price started to show reversals a few days ago, which was here. And if you notice, most of the trades which we have been giving us losses have been during those days from 1, 2, 3, 4, from 5 days ago. If you have been trading C5 and getting losses while it's selling, just know that it's not you who really has the problem. It's just the way price is moving. We are not in a downtrend. Price is literally going sideways here, right? So the probabilities of actually getting a good trade become lower if your price is sideways or if you're trading against the main trend. That's one thing you should note. So maybe if you're having losses, don't give up too fast. Just know that sometimes the market conditions don't line up with the system we use to trade or with the strategy we use to trade. So you just have to be patient until price gives us something solid. So our sell, that's why I also say we only have one position. Why one position? We don't want to miss the trade. That's number one. Number two is we're using minimal risk because it's just one position. Then number three is we have to wait. If price then confirms that we are now bearish by maybe breaking some levels here, like that red line I mentioned, because there is huge possibility that as soon as we break that red line I showed, we could actually push down. But let me just remove these lines here. Okay, this is 4 hour, right? So on the 4 hour, I'm just going to lower that red line to the wick of this candle. So as soon as we come below this red line, it will be safer to actually sell now and hold. If we get something like this, at this point, price will most likely bounce off here and retrace. So I'm looking forward to see acceleration, maybe a tiny bounce on a smaller time frame. Then they get here, take out liquidity, bounce off the 50, then maybe come back here, play around this area, then potentially drop. That's something I'm anticipating on C500. So if you're used to seeing price, you just have to anticipate and always anticipate on both sides so that you don't get too married, like too, how do I put it? Yeah, you don't get married to a bias. Like you don't, let's say like now we're saying price might potentially come down. We must actually be open to seeing it come up as well. Because remember, there's liquidity above this area. There's liquidity above this area. So they can still push up before they even come down. So that way, when we take our trades, yes, we are selling at CMP, but we're still open to seeing this price disappoint us and maybe extend the high just one more time before they actually drop. Because if you notice that gray zone at the top here, it hasn't been tapped into from this level here. We haven't tapped into that area. So two things will happen. Probably the dealer might say, maybe there's a lot of sell limits here, so they might decide to drop the price here. Or people have already sold here like us and they want to take us out here, then activate this before dropping. So these are all scenarios we just have to play in your head when you're trying to come up with a setup. So for now, my view, I'll just stick to this initial view which I gave. If we do come up back up here and we give a rejection candle, then I'm looking forward to add one more position here, then see if we can drop with it. So that's my view on C5. B1, we spoke about it. B5 gave, I think it was one of the best setups yesterday if you took B5. Because this one, we just analyzed it during the Zoom. And what happened is, I think when we had Zoom, we were here, right? And we were waiting for price to come bounce off. So as soon as I saw this rejection, I was active here. But I did not put a stop loss here because I know B5. I was still open to see them maybe come tap into this order block here, right there. So I did not put a tight stop loss here. I just allowed the trade to breathe a bit. If your stop loss was here and price took you out and you still saw this, you could still have entered here. You could still have entered here. Remember, we also had this previous day's high as a point of interest. So at the break and retest, you could still have entered here. You could still have entered here, still have entered here. There were so many points of interest, and you only had to catch one of those. So I hope you guys caught B5 yesterday. It was a good trade, good setup, and they pushed all the way to TP. That red line on top there, let's just go to H1. You see that red line where it was coming from this level here, right there. So they pushed all the way up to that TP. So right now, how are we going to trade this today? Today we might actually not have a trade since we've taken out liquidity, right? Liquidity has been taken. And here price has been going sideways. That's the first thing. TDI is giving lower highs. It's slanting downwards. This one is straight. So this is a divergent setup for a possibility of price to start retracing down. So I don't have any buy B5 today. So I don't have any setup at all until maybe I see something else. For now, I feel like price will be pushing down. Sellers can get involved. If you are selling, then you can start looking for sales because as you can see, probably the safest sell will be below this area here. Right there. That's when you can get a safest sell. But I don't want to talk about sells on the booms because I don't want to confuse myself and start looking at things which I don't actually trade. So I'll just focus on the buys. So B5, I do not have any trade. Step index, yesterday we had these zones. I don't remember what actually we were waiting for on step, but from what I can see, I can just explain to say price actually came to a point of interest, which I'm sure we anticipated it to come down here. If I'm not mistaken, those who follow step, if you watched yesterday's analysis, I'm sure we were waiting for them to come down here so that we can buy. So if they came down here and you managed to take a buy today, then well done. It means you're actually following price and you can actually trade confidently. So what I see now is price can still potentially push back up here. So maybe let me talk about yesterday a bit. So if you're looking for sales after this liquidity is taken, the first thing is you want H1 reversal, which we get right here with this bearish engulfing. So as soon as we get the bearish engulfing, we start actively anticipating a sell pattern on the smaller time frame. But at the same time from H1, you can see this is the highest high. The order block is right here. That means the safest sell after this peak were below this zone. That's before this price action painted, right? This was the safest area. So let me show you how you also could have attempted it. So at the close of that bearish engulfing, okay, price started to retrace, right? So let's jump to M15. Remember, M15, we're looking for a pattern. M15, we had a high and we had an order block. And we also had the previous day's high right here on this. There's a dotted line which you see here. So we were at a point of interest. So price broke the order block. We had another order block here, which is in line with the H1 order block. So at this point, this is where you would have loved to start looking for sales, but this price action was too dirty here. This was not so clean. So maybe you could have waited for an impulsive move or for a safer buy when price broke the next visible order block, in which case it was this one here, this structure here. If you want to see that there's a structure, if you not familiar with market structure, you can just switch to the line chart. So if you jump to the line chart, you see this is the last structure after price created a high here. This was the highest high. This is the last structure before they pushed back up. So at the break of that structure, that's where you're looking for your sell. So it's either you sell a current market price. If price retraces and bounces again, then you can sell again. So if you struggle with market structure, just don't hesitate to actually switch your chart to a line chart so that you can see where the price is bouncing. So at this point now, what do we have on TDI? TDI, we had like baseline bounce type of confirmations right here, right here. And as long as we are below the baseline, if you're seeing sales here, this confirms it and you can execute. So you could have sold anywhere up until this point. You could have also sold maybe below this level right there. There was nothing wrong with that sell as well. So this is for those who trade step index. That's how you could have approached this yesterday. So looking at today, again, like I say, it looks like we're bullish. From the low, which was here, we pushed up, created this high, retraced, played around this area, pushed up, came, bounced off this area. So if you're in a buy here, stop loss will be right here, and this would be your TP. Yesterday's high will also be your TP. What am I anticipating? I'm looking forward for a continuation buy. And I would say my buys will be valid as long as price does not break this level. That's where the buy which I'm seeing right now will remain valid until price comes below that zone. If you come below, then the setup becomes invalid. But at this point in time, I would advise, if you're trading step, I would advise you look for buys. So what do we have on the 5-minute time frame? We've got a fair value gap between this candle here and this candle here. So if we extend it, you see that white space there. That's a fair value gap where price can come into. Then the TP is right at the top, the red line, and yesterday's high. So if you want to trade this, maybe the setup you should be looking for is something like this, or something a bit deeper, but still pushing up. But if we come below here, then price might decide to come down, maybe into yesterday's low. Maybe they might bounce off here and push up or start to push down. But for now, the only visible setup which looks valid for me is the current one. So we need a push down, then we can jump in. So sometimes, let me also specify this. Sometimes you might hear me say, we've got a 5-minute fair value gap. Then as price is moving, the 15-minute might create a fresh fair value gap. So sometimes I might not have time to update you guys to say, okay, there's now another fair value gap. Can you please enter? Those are some of the things you just have to know if you're trading. So when I state points, they are mainly points of interest, not necessarily execution points. So you just have to formulate your setups around that information. So like, for example, if you notice now on M15, we also have a fair value gap just below our order block. You see this zone right here. That's a fair value gap here. So that means this price might break these levels but bounce off here, then still push up. At the same time, we know there's a 5-minute fair value gap, so they might bounce off there and push up without coming to this one. So we won't know what will happen until price respects those zones. So that's the last thing I need to specify on that one. Then if both zones are broken, setup becomes invalid and we wait for the next best setup. So I also would love to pay attention if they might want to come and bounce off the TDI market baseline as well. Because if you notice here, we're double baseline bounce from this level. So also take note, if you're using the TDI and you see a double baseline, that thing there is equals to money. That's what you should put it in front of your PC. Double baseline equals money. As long as you see a double baseline in your directional trend, execute that trade without fear, put your stop loss and let it run. So here the entry, this is confirming this. This would have been the low, this would have been the order block. The break of the order block, entry, retest, entry, a break, entry, and you just wait for the price to run. So I hope that helps as well. But that's specifically for those who use TDI. Then finishing off with J10, I hope you guys caught J10 as well, because this one we spoke about it. If there's anyone who trades jump 10, I remember my point of interest. I wanted price to come down into this order block, right? They did not come there, but what did they do? We had this level here. That's why we always look at price on both sides. It's for days like this. So at this point, we were saying if price does not tap here, we still want to catch the buy. So where can we catch it from? So this was the order block where we put that red line, and we had a nice break here. So if you entered at the break, that was a good trade. If you entered right here at the retest, that was also a good trade. So if we jump to H1 now, that's where we actually got that retest. That was yesterday. So yesterday we got an impulsive move. What do you notice on this impulsive move besides this level? Let me ask you guys a question. From everything we've learned from here to here, what do you guys notice? What could we have used to get into this buy besides this level? Besides the red line here, what could we have used? Let's see if people will be paying attention to these sessions. You can just type on the charts box what you see. Let's see. FVG. Yes, there's a fair value gap there. You could simply have used the fair value gap right here, this gap between this candle and this candle. So now what happens is the fair value gap is falling on an area where we've got a broken zone, right? It's falling right on the 13 EMA. These are now confluences piling up. It's falling on an area where we actually also have a bullish bias for today. So we are actually open to seeing a buy happen. If you were to run your fib from the lowest low to this high, that fair value gap is falling right on 61.8. All these confluences lining up, they're just setting you up to open a position and to make some pips. Different setups now, what will happen is some setups will do like this. These setups are very painful because it takes a lot of time for them to move. So imagine entering here. Now you've got 1, 2, 3, 4, 5, 6, 7, probably 8 hours or 9 hours until the trade actually maybe hit TP or actually gave a considerable move. They were actually playing the same on the same zone, going up, coming back down to entry, going up, coming back down to entry. These are just variations to the markets. We won't know this will happen until we are actually in the trade and it's happening. So besides the setup being correct, this just tastes your patience. Because sometimes you might decide to exit here, then price comes, you decide to buy here, they come back, they take you out. Because if you also notice, the wick of this candle is actually slightly below the fair value gap. So depending with your stop loss also, you might have the setup correct, but your stop loss might be too tight. Price will still run to your TP and even go beyond, but they would have taken you out. Those are some of the things which you just have to expect as a trader, because no setup will be 100% perfect. There will be something like a small mistake somewhere which will just affect your trade. Sometimes maybe you might take the trade, take profit here, they retrace, then the next day you realize they came here, you would have been like, maybe I should have held. But at the same time, if you had held, maybe this week would have taken you out at break even or with a small loss, and you might have missed out on the profit which you had targeted. You see, so these are some of the things which just happen, and it happens to every trader, no matter how good you are, it happens to you. So otherwise, the setup was correct though. Nice fair value gap, 61.8, multiple confluences here, and they played out. So what are we anticipating on jump 10 today? Let's just quickly check the daily. I remember we mentioned that price is most likely coming up here, right? So my bias is going to remain the same. I'm still bullish. I would rather say maybe we missed a move already, but let's just quickly confirm again by looking at H1. So on H1 here, what points of interest do we have? If this current move is an impulsive move, we want to see a defined retracement, then we can still run a fib. So if this is the current high, that means our fib will be looking like this. Our points of interest will form anywhere in this area here, starting from the 13 EMA, which will be around 38.2. to this fair value gap here, which will be around 50, to this order block here, which will be around 61.8. So this whole area is a point of interest for us to actually get a buy. That's only if this price retraces from here. Certain scenario is they might continue pushing up. That way, this fib will be extended. Then we are going to have new values, and fresh order blocks, and maybe fresh fair value gaps to look at. So this one I'll keep updating during the course of the day, depending with how they decide to move price. So I'm just going to leave it on H1 as well so that I can clearly pay attention to what's going on. So that's it for J10. Step index, you just wait for it there. B5, I do not have anything. B1 looks like they will do that stop, and we'll just keep an eye because otherwise these guys are still bearish. So once I get a confirmation here, I'll also let you guys know. C5 looks like they retrace into the order block. Let's just wait for more price action here. 4 hours is not yet clean. There's nothing solid in terms of sells. So we're just going to hold one position we have, or it looks like they just spiked. So on C5, let's just manage that single position we have. Let's just manage that one. When we get more confirmations that we are actually now bearish, then we'll look for more entry points so that we can add onto the cells. C3, they've now broken that liquidity. I still anticipate them to pull back up. If they continue pushing down, then that's a miss for me. I would rather trade after I get a pullback. I'll be looking forward to see something like this. You see this pattern on the left. I want to get a retracement like this, maybe 2 days of retracement. Then we can look to sell. So that's the pattern I'll wait for here. So in terms of today, I won't have any trade. Then last but not least, C1000. We are waiting for it right at the top here. This also looks like they could actually be bouncing off this order block. So I'll keep an eye, but I'll only consider sells after we come below the 13 EMA as well. So that's it for me, guys. We've got NFP just now. Let me just jump onto the charts again and see what we have. But usually on NFP, I trade usually 1 hour or 1 hour 30 minutes after NFP. That's when I actually trade. NFP, you don't want to trade if you do not want to risk your capital. But if you want to risk your capital, then you can trade if you've got a direction. But if I do see something, I'll share, but I'll say it's safer to protect your capital. I think that's it for me, guys. We'll continue this chat on Telegram. Thank you so much. Have a safe weekend. Good trading.